Thank you for having me in for a consult today.
Thanks for coming, mate.
I want to kind of like dive down deep into the real estate side of things because being in this stage of life, it's kind of like a time where I start to explore the real estate world. And so I kind of wanted to know first, like, I know you do a lot with professionals in terms of like commercial property, but you also do a lot of residential as well. So I wanted to kind of dive into the differences between the two. As an investor, I'm not going to live in it. I'm not going to live in a warehouse. I'm not going to live in a house or an apartment. But as an investor, what's the main differences between like a commercial property investment versus a residential investment for someone who is, say, late 20s, early 30s, have a little bit of savings? Like, what's the differences like between investing into commercial versus residential?
Yeah. So it really comes down to what your long-term goals are.
Yeah.
And also comes down to what your current financial capacity is.
Right.
So let me explain what I mean. So with commercial properties, without a doubt, the potential to make a bigger profit is there. Okay, because with commercial properties, there's a lot more creative ways you can add value and do a lot of stuff.
Right.
And you can make massive profits.
Right.
But on the flip side, commercial properties are also more complicated, and that's why they're also riskier.
Right.
So it really comes down to what your long-term goals are, what your risk appetite is, and also what your current financial capacity is.
Right.
So one of the biggest risks with commercial property, which a lot of people don't know, is the potential vacancy rate.
Right.
Okay. So with residential, particularly in today's market, worst case scenario, you have your property vacant for maybe 3 weeks, 4 weeks max. You'll always find a tenant, someone to live in it.
Yeah.
With commercial properties, it's not unusual to have it vacant for 3 months, 6 months, 12 months.
Oh wow. Okay.
Yeah. In some instances, it's not uncommon at all. So, if you had a strong balance sheet that you're able to absorb the vacancies in commercial properties, then I would say, yeah, sure, look, then commercial properties in the long run is probably going to make you more money. But for most people that you're describing, they can't afford to hold that property 6 months vacant. Okay, so let's say you buy a $500,000 commercial property.
Okay.
It's going to cost you at least $2 or $3 grand a month just to hold it.
Yeah.
With your mortgage repayments and all that type of stuff.
Yeah.
For most people, they can't afford
That's true.
that, right? So that's the key difference. So generally speaking, what I always say is, if your budget is under $1 million, you're probably better off going with residential.
Right.
Because of the risk that I've just mentioned. And also, when you've got a budget of less than $1 million, you're limited to what you can buy in commercial. Most likely, you probably buy something that's a strata,
Small warehouse,
maybe a shop, office, etc. So because you're buying properties of that nature, you've got very little value add opportunity.
Right.
Okay? And also, because you're buying a smaller property, most likely you just can have one tenant in place. Whereas if you go above $1 million, $1, $2 million, or even higher, you can now potentially buy a larger property with multiple tenants.
Right.
So maybe it's a little shopping center.
Okay.
Maybe there's 3 or 4 tenants in there. So your vacancy risk gets lowered because if you have one vacant, you still have 3 tenants paying your rent.
That's true.
Yeah, and also when that time comes for you to sell the property, you might be able to do some value add to it. Maybe there's a bit of land in the back where you can extend the building. Maybe you can refurb. Maybe you can restructure the lease and all that type of stuff. Whereas with residential, there's a limitation what you can do.
Yeah.
Maybe you can build a granny flat, maybe you can do a subdivision, new kitchen, all that type of stuff. So it's limited.
Yeah.
So, if you had the ability to go commercial, without a doubt, commercial is the fast track way of building your wealth because the profit margin is a lot bigger. As long as you can handle the risk, the downside of things.
Right. Okay. So would you say then commercial is more a rich man's game? Like you have to be someone that's, on at least if you're from a corporate background, you're on a very, very, sizable income salary package. I foresee that commercial is not something that a person that is on 100K a year can get into or successfully anyway. Whereas especially if you've got to hold that risk of potentially a 1 year of no tenant. Would you say, what type of person would you say is best suited for commercial then?
So I think there are two type of commercial property buyers. One are owner occupiers, so somebody who wants to put their own business in there. Okay. So let's say I own a dry cleaning business, and I find a nice little shop front in a busy street where I can guarantee I'm going to get customers. Then maybe it makes sense for me to buy the property because then I can guarantee my business can stay there for a long time. So don't have the risk of getting kicked out. And things like that. So that would make sense for an owner occupier with a sustainable business. The other one, obviously, the investors. Now, so if you're an investor, there's nothing stopping you from buying a $200,000-300,000 commercial property. But like I said, my recommendations would be you lean towards residential, and I explain the numbers in a second. So if you want to buy something that's above $1 million, where you can actually make proper money in commercial property, then you probably need at least $300,000 cash to use as a down payment. And you probably need to be earning at least 6 figures in order for you to do that.
Would that be like 6 figures as in 100 or like 200, 300? Because it doesn't feel like anyone on 100 nowadays can get by with much.
Yeah, that's the reality of it, unfortunately. It comes down to the property itself. So what I mean by that is if you have a good tenant that's paying you decent rent on a long-term rent, lease, beg your pardon.
Like a 5 plus 5
5 plus 5, 10-year lease, whatever. Then you can actually go to the bank and ask for a lease stock loan. Okay. So the lease stock loan takes into consideration just what the tenant is paying. So they don't take into consideration what the investor is making. Okay. So you might be able to buy the commercial property even if you're earning 30 grand.
Interesting.
A year, as long as the property itself has a good tenant paying good rent.
So the way it'll work is, let me try to get it very straight so that everyone can understand. So there's already, we're talking about a commercial property, not a brand new one, but one that has an existing tenant. And you're taking over essentially the ownership of that property with an existing tenant inside who are paying an X amount. So the bank will factor that into your borrowing or into how you purchase this property. And so as long as you have the deposit for this property, then and whatever number you're borrowing, the bank already knows that, hey, they're already going to make payments for the next 10 years. So it reduces risk for them.
Exactly.
Gotcha.
Yeah, that's right. So commercial property and residential property is a slightly different ballgame. Commercial property is really good for people who have very limited borrowing capacity right now, but have a big deposit.
Gotcha.
So those are the type of people that can really take advantage of commercial property right now. But generally speaking, back to your original question, is it a rich man's game? I would say people who have a stronger financial capacity would definitely be more suited for commercial properties. Because it's not about making the money, it's about maintaining the risks. And if you're making 30 grand a year and the tenant goes broke, goes bust, how are you now able to ride out the next
12 months?
Exactly. So that's why it is more advantageous for people who have a stronger financial capacity to go into commercial.
Okay. And what if like, let's just say I myself can't afford this commercial property, but I want to go and buy this commercial property. Actually, before we even get into that, what's the down payment for commercial? Because usually, for residential, you can get away with 0% deposit because you can obviously have someone, a guarantor. You can, nowadays, there's the first home buyer scheme, so 5%, 10%, 20% for residential. What about for commercial? What's the deposit like there?
So you raised a really good point. So residential, it's easy to get into for all those reasons that you mentioned. Commercial, generally speaking, the banks want a 30% deposit.
30%, wow. Okay.
In some cases, they'll do 25 and 20. But obviously the interest rates go up.
Of course.
So as a rule of thumb, you probably need about 30%
Okay. So we're
Yeah.
talking about at least 300K cash.
Yeah.
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 To play a decent commercial game at least.
Yes, that's
Yeah.
right. That's right.
Wow. Okay.
Yeah.
And so then back to the point. Let's just say I can't afford that myself,
Mm.
and I don't want to like maintain that risk myself. Is it a smart idea then to grab 3 other friends who have 100K each cash, and we can spread that risk and go into commercial, play that game?
Potentially, yes. So let me illustrate a point here. Okay.
Okay.
So it comes down to what is the long-term vision.
Gotcha.
Okay. So if you're here to just make a quick buck, and you want to flip properties, then yeah, absolutely. I think like, you know, if you got a few friends together and you're able to flip a commercial property and
Yeah.
double your money in 12 to 24 months,
Yeah.
I think that makes perfect sense.
Of course.
Okay. But let's say you don't have the luxury of your friends.
Yeah.
Okay. And let's say you have the $300,000. Sorry, you have the $100,000.
Yeah.
What can you do? Okay. Well, then you probably have to, what I call using a stepping stone
Okay.
strategy, where you probably have to park your money in residential,
Yep.
buy residential in a high growth area,
Right.
so you get maximum capital gains quickly.
Yep.
But have to be careful you're buying property that you can still service the loan.
Right.
Okay, so it's not eating into too much of your cash flow.
Yeah. Correct.
Okay, so you know, let's say you had $100,000.
Yep.
Roughly speaking, you can probably buy a $500,000 property.
Yep.
Okay, so if you can buy a $500,000 property with massive growth potential, you know, maybe in 2 or 3 years' time, that property will be worth 650, 700,000.
Yeah.
Okay, and we've seen examples of that the last 2 years in southeast Queensland, where we've seen
Yeah.
properties literally go from 450 to 700 in 2 years' time.
Crazy.
Crazy.
Yeah.
And there are still markets like that across Australia
Yeah.
right now,
Yeah.
as we're speaking. So let's say you park your money in the right spot, you bought the right property, and you wait for 2 years for the capital growth.
Yeah.
Now that property has got $300,000 equity.
Yeah.
Then what you might do is you either sell it or you refinance it. That's where you get your $300,000.
Yep.
And then you can start playing
Right.
commercial property again.
So taking a step back to go forwards, essentially, you know, take my 100K and start off with a lower level property.
Yep.
In potentially not even a state like New South Wales, and go external, and then take that equity. I've got to wait now 2 to 3 years, but
Yes.
at least then it allows me to play with money that didn't exist before.
Yes.
Okay.
Yeah, that's right.
That's smart.
right.
That's smart.